Good morning, capitalists. Here is everything you should know today. Hello, capitalists. Here is everything you should know today. Diesel hits $5 plus. As Iran war disrupts Hormuz supplies, airlines boost guidance. Despite Iran war fuel hit, NVIDIA eyes $1 trillion orders for Blackwell Vera Rubin. MasterCard acquires BVNK for $1.8 billion stablecoin push. Texas Rare Earth Project breaks China dominance. Pacific Fleet deploys Gecko wall-climbing robots. Today's Markets Plus Assets, sponsored by the Wellness Company. Dow Jones Industrial Average sitting at 47,134.98, up 0.40%. Blue chips holding steady with broad participation. S&P 500 at 6,729.32. gaining 0.45%. The benchmark showing nice breadth today. Nasdaq Composite outperforming at 22,477.11, up 0.46%. Tech and growth names catching a bid as risk appetite ticks up. The big story in volatility. The CBO EVIX, Wall Street's fear gauge, dropping sharply to 22.33. down 5.02%. That's a meaningful unwind from recent spikes, signaling traders are dialing back some panic as oil eases and the conflict appears contained for now. Over in commodities and digital assets, gold pushing higher to $5,018.10 per ounce, up 0.32%, still benefiting from safe haven flows amid uncertainty, though stabilizing as tensions moderate. Silver pulling back a touch to $80.48 per ounce, down 0.24%. Industrial demand supportive long-term, but short-term profit-taking after recent runs. Bitcoin steady in the mid-70s at $74,202, edging up 0.20%. Crypto holding firm, with eyes on macro liquidity and any Fed dovish surprises. Welcome to today's Finance Roundup. It's March 17, 2026, and there's a lot moving in markets right now, from fuel prices feeling the heat from geopolitical tensions to big bets in AI, payments, critical minerals, and even naval tech. We start with energy markets, where the ongoing Iran war is hitting supplies hard. Diesel prices have surged past $5 per gallon nationwide, the highest since 2022. As of today, the U.S. average sits at $5.04 per gallon, up 34% from pre-airstrike levels. This marks the first time diesel has topped $5 in over 3 years, and the primary cause is the halt in most tanker traffic through the Strait of Hormuz. That disruption is being described as the biggest global oil supply shock in history. Gasoline is climbing rapidly, too. The national average has reached $3.79 per gallon, a 27% increase since the war started. If supply pressures continue, forecasts point to $4 per gallon in the near term. Crude benchmarks reflect the intensity. U.S. crude is trading near $94 per barrel, Brent around $101, both showing over 40% gains during the conflict. Iran has attacked vessels and blocked key routes, and that tightness is flowing straight through to pump prices. The economic ripples are spreading. Trucking and rail firms are implementing fuel surcharges to offset the higher costs, and analysts expect upward pressure to persist until Hormuz flows resume and the disruptions start to ease. On the airline side, higher jet fuel costs from the same war are creating headwinds, yet Delta and American Airlines have both raised their first-quarter revenue outlooks. Strong demand is helping offset roughly $400 million in added fuel expenses for each carrier. For Delta, bookings are up 25% year-over-year, with mid-single-digit unit revenue growth. That strength has let them maintain their original EPS guidance of 50 to 90 cents, despite the fuel hits that carried over from Q4. American is guiding even higher, now projecting over 10% total revenue growth for the quarter, up from the prior 7 to 10% range. They describe the demand as incredibly strong, even amid the industry turbulence and Q1 fuel pressures. Jet fuel is the second largest expense for airlines, accounting for over 20% of costs, so a $400 million hit per carrier is significant. But robust passenger demand and higher fares are mitigating much of the impact. The market response has been positive. Delta and American shares gained about 5% in early trading, suggesting investors are betting that demand will continue to outweigh the war-related oil cost challenges. Switching gears to AI and semiconductors. At GTC 2026, NVIDIA CEO Jensen Huang projected up to $1 trillion in orders for Blackwell and Vera Rubin systems through 2027. The driver? Exploding demand for agentic AI and much faster inference capabilities. The Vera Rubin platform, slated to ship later in 2026, brings major efficiency improvements, 10 times performance per watt compared to Grace Blackwell. These rack-scale systems incorporate 1.3 million components tailored for demanding AI workloads. NVIDIA's acquisition of Grok's 3 LPU, set to ship in Q3 2026, combines high throughput and low latency processing. When paired with Rubin GPUs, it boosts tokens per watt by 35 times. Huang highlighted how the shift to agentic applications is dramatically increasing token generation needs. More capacity, he noted, directly drives higher revenues for AI users and developers. Looking ahead, they teased the Kyber architecture prototype, which integrates 144 GPUs vertically for greater density and lower latency. That's planned for the Vera Rubin Ultra rollout in 2027. In the payment space, MasterCard is deepening its blockchain push. They've agreed to acquire stablecoin infrastructure firm BVNK for up to $1.8 billion, with $300 million of that in contingent payments. The deal is expected to close before the end of 2026. BVNK's platform enables payments across major blockchains in over 130 countries. It effectively bridges traditional fiat and stable coins, supporting remittances and business payouts with faster, lower-cost cross-border transfers. This move builds on MasterCard's crypto partner program and positions the company to compete more aggressively with Visa in blockchain-based transfers, particularly as regulatory clarity improves. MasterCard's chief product officer expects that most financial institutions and fintechs will offer digital currency services over time. On the critical minerals front, Texas is advancing the Round Top deposit, one of North America's richest heavy rare earth sites. The aim is to significantly reduce U.S. dependence on China for minerals essential to defense, semiconductors, and advanced manufacturing. The deposit holds 15 of the 17 rare earth elements, with a strong emphasis on the critical heavies needed for those high-tech applications. Texas State Commissioner Dawn Buckingham has pointed to billions in potential revenue for public schools, along with the strategic importance of challenging China's global supply chain stronghold. The project focuses on securing domestic processing and supply chains to lower vulnerabilities and strengthen national security for the U.S. and its allies. USA Rare Earth is accelerating development at Round Top while building momentum and exploration throughout West Texas. And finally, a defense tech story. The U.S. Pacific Fleet has awarded Gecko Robotics a $71 million contract to deploy wall climbing, flying robots, and AI for ship maintenance. These systems inspect hulls and tanks on 18 vessels, up to 50 times faster than traditional methods. The robots climb hulls, crawl through tanks, and fly in confined spaces, sending data to the AI-powered cantilever platform that identifies repairs far more quickly. The 5-year deal, with an initial value up to $54 million, covers destroyers, amphibious warships, and littoral combat ships. In one instance, the technology avoided more than 3 months of flight deck downtime. Gecko currently operates 250 robots and plans to deploy 50 to 60 more this year. Through the partnership with GSA, the focus is on improving Pacific Fleet readiness with precise, rapid data collection and repair identification. That's the roundup for today. You now know more than most people do about what is going on in the world of finance today. Thank you for listening to The Capitalist and supporting us. Together we will make capitalism great again.